We have breaking news coming through from Deutsche Bank. The German lender is cutting 250 banks in the securities unit. That is according to people familiar with the matter. The reductions are said to continue and could rise to more than 500. So it looks as if that number could increase. The CFO has urged more cost discipline after the previous target had been abandoned. So further news coming to us from Deutsche Bank. Let's get more on the Deutsche Bank story. We're joined now by Bloomberg German banking reporter Stephen Arons in Frankfurt. Stephen, thank you very much for joining us. So give us the top line story here and explain why this is happening.
Well, I mean, as you said, Deutsche Bank needs to cut costs. It's imperative on them. They still aren't profitable. They've had 3 straight annual losses. So cost cutting is at the forefront of the priorities. Krein, the CEO, just said as much at the beginning of this month when he presented last year's numbers. It's a cost-cutting exercise.
And put this in some context, though, Stephen, in terms of the numbers and the parts of the business that we're talking about at Deutsche Bank.
I mean, as you probably know, Deutsche Bank is still the biggest European investment bank. It has about 17,000 employees. We're talking here executive, top-level managing directors and directors. I'm not exactly sure how many there are, but if they do cut 500, that's going to be a substantial amount. It's going to decrease costs. However, Deutsche Bank's investment bank also has a revenue problem. It's been declining for a long, long time, and cutting people won't help them boost the top line. John Krein is facing a big dilemma here. He needs to cut costs. He also needs to increase revenue. And the question is, will this cut help him achieve both goals?
Yeah, they're talking more about cost cutting then, as you say, Stephen, but they'd previously moved away from a cost target. What was that? So what was the explanation there? As you say, revenues at a 7-year low at this bank.
Exactly. I mean, John Krein, he's known as a cost cutter. That's one of his top priorities. However, he had to, as you mentioned, he had to abandon his 2018 cost target at the beginning of this month. He said the initial target of 22 billion as adjusted cost basis will not be achievable anymore. They're now targeting 23 billion. That didn't go down too well with investors. They were concerned about this, and increasing the cost cuts now at the investment bank, which, as you can imagine, eats up a lot of the costs. That's certainly something that we can see as a reaction to that, how he wants to speed up cost cutting now that he had to abandon the 2018 target. They're still sticking to their 2020 target. So I'm pretty sure this measure is intended to help him achieve at least that goal.